Welcome back to Appgear Capital Podcast, where we discuss private market, alternative credit, and patient capital. Today's guest, we have Simon Utakala, Chief Investment Officer of LDDZ Family Office, with experience spanning from public market, private company, and multi-asset stewardship. Simon is overseeing multi-asset allocation and direct investing. Welcome.
Thank you.
Before we start digging into the family office in general, now that you've been in the family office environment and you started your background in accounting, private capital, how that shaped your investment strategy and philosophy?
Yeah, so I started out in accounting, going into Deloitte. I was in the audit stream, but my passion was really investing. So during that time, I was reading all sorts of books, like the typical Intelligent Investor, all the day trading books, like the Turtle Traders, and I forget what they were calling it, Turtles or something, and other things like I even read through security analysis, that big, thick,
I did
every
too.
page. Then I was trying to apply that to my own investments personally. The problem always was I was at a firm where I had to get clearance to do investing. So I actually ended up going into doing even trading courses. So it went from both value investing and trading, but I veered more so that's kind of a smaller bucket and I could never get into it. So as time went on, I'm more of buying a good business, and if I see something one-off, I'll get into it. For example, I'll do a small thing, obviously things like crypto. Everyone's always, I don't understand. Even though I might have not 100% understood, I saw the vision, and so I put a little bit in, and it ended up doing okay. So over the years, it's just a matter of all the investment books I read, and then being involved from Deloitte, I switched over to Sprott. And there I was on the accounting side as well, but trying to get into the investment side. And through that world, I got introduced to another family office and went from dealing on the accounting to actually being involved operationally in businesses. So more private equity type approach, which gave me a different perspective. And then from there, it's evolved to more external, not involvement in the businesses. So I've had both.
I think the books you're mentioning about the intelligent investor, value investing, I think it's the course 101 of investing.
Yeah.
If anybody who's passionate about investing in long-term capital, you have to go through these books.
Yeah, even the corny ones like How to Make Money in Stocks by William O'Neill. I read it all.
The Common Sense Investor. And
yeah.
So same thing for me. We have the kind of this cross relationship because I had to do that kind of education aspect as well.
Right.
For you to understand how long-term capital work.
Yeah.
I think that's the key. Being in a family office environment, when you see a manager or an opportunity, I would say what's a common misconception people have about family offices? You still cross paths now that you're in your career. The people don't fully understand.
Just in general
just in general,
offices.
yeah.
I think depending on who you talk to, some people don't even understand what a family office is. They're just you're like an advisor, like at a bank, or they just think I look at investments and that's it. It's not just the investing piece, which is a big piece, but it's everything from some administrative things, legal, estate planning, family matters, just dealing with the different family members, personalities, thinking of succession, both in terms of the family and maybe even certain portfolio companies.
Mm-hmm.
So it's all philanthropy and where the family, it's anything pretty much. Even sometimes funny concierge services where I need help with hiring this person for me to do X, and can you read the contract? It's everything. So it's very broad. I think the misconception is you're an investment guy.
Yeah. I would say that is super accurate because from our perspective, even us as a fund, you will be surprised how mundane tasks that we do because we still have to operate in the sense where we have an obligation towards the family also. But yeah, it's something that many people don't fully understand. I would say also the patient capital aspect. Can you talk about that? Where people believe that the investment side, like you said, it's only about deploying capital, but really, it's really to be able to deploy capital and then be able to sleep well at night.
Yeah, so I think it depends on the family you work for and the type of risk that they want to take on. Some families love the risk, and let's say like all they do is VC type investing, startups, and so you have to get a sense for what the family wants and likes in terms of risk appetite and their interests. And then also, so looking at it holistically, you know, sometimes the family will be, you know, there's a portion of the capital that's just, it's sitting there and you know it's fine. It's doing a nice high single digit, low teens or something, and you don't have to really think about it, no headaches. And then there's portions of the portfolio where either you're involved operationally trying to transform businesses, or you're, you know, just taking on greater risks, but it varies.
And how do you justify risk in general, like especially in a market like us right now that's constantly changing? Is risk changing also with you guys? Like I know that when we talked to our colleagues like last year, a lot of people were sitting on capital. They were just seeing how the market is evolving so quickly. And now I would say there's an uptick on deployment. But how do you see that in terms of your world right now?
For deployment, again, it's patient capital. And what I mean as well through that is, depending on where the family is in its journey, you know, sometimes let's say the principal has already typically has already amassed a lot of wealth, and maybe they're in their journey where they're either giving back or it's not about the highest return.
Yeah.
And so you look at the buckets of where you want to put the capital in terms of which asset class, and it doesn't necessarily always, you know, you're not looking for the best return because obviously there's more risk to that. You're looking for something that's steady, and yeah, you can sleep well at night.
Do you have any qualities that you look for external managers, or any qualities that you feel when you are meeting a partner that those qualities matters for you?
Of course. So one of the things would be like managers that are going to be managing our capital, where we, let's say, either don't have the in-house expertise or the bandwidth. We want transparency. Communication is very key. So if we have questions on things or want to see or dig deeper, that they're not elusive or trying to avoid the question. So getting a sense as to how open they are about their performance, track record, their team, etc. That's an important aspect. And then obviously like our sense and kind of reading in terms of their integrity and trust that we would have. A big thing is trust. Before you put your capital somewhere, you want to vet it and make sure you trust the people that are going to be stewarding your capital. So it's
yeah, I think we like here, that's something that matters so much for us because coming from a, like you said, operator and builder background, they're so used to do everything themselves. So it's always interesting when you bring somebody else to the table and show how they could be part of the value chain, you know, to co-invest together, to build together and grow together. And that's an education process that most families are either open for or sometimes it's an uphill battle. But the biggest thing for us is trust, like you said, trust and transparency, and I would say values.
Yeah, and even, you know, the family will typically build their wealth in one industry, and then it's opening them up once they have their wealth to different industries, different asset classes, things they might have not ever seen before. So sometimes it's also an educational process as to these are the types of other investments we could get into, and these are the other industries, and these are ways other families are allocating their capital.
It's exactly. I think it's for us here. The way we co-invest with others, it's really, can we align our mind together and see the big picture, and what's the outcome? The outcome is not necessarily always to, like you said, to make money, but it's really how can we build that relationship for long term. It's something that most people, I would say from our sense, still don't don't get about family office is more like they would rather do multiple transaction with the same people over and over again than always bringing new players into the table, and that takes time.
And you have to be careful as well, though, because sometimes families might get into the trap of, oh, this is a family friend, I trust them, but that might not be the right investment decision, in the sense that they might not have the experience running that strategy, and it's just, it's a family friend, he brought this investment, okay, I'm going to put money in it, versus like, okay, if the investment's in private credit, let's look at who do we trust to be the best operators in private credit, and let's allocate there, versus just, I know this guy. So it's a little bit of a journey, and it's new people, but maybe with the right due diligence, you kind of open it up to the family to understand, okay, these guys are truly world-class operators.
100%. And you talk about private credit, it's a great transition because I think that's one of the things that we're passionate here also. I would say, what's your feeling about private credit right now in the Canadian market, real estate market? And, everybody's talking about the sky is falling and, Trump tariff and the economy, but everybody have a different perspective on that market right now. So I would like to kind of see what you're thinking of.
So we like private credit. Maybe a couple of years back, it was slightly higher returns, but it's still good returns right now. I mean, the rates have dropped a little bit, but when we got into it, our thinking was, okay, if I can get low teens and be first secured in the capital stack at a very well-run company that's pumping out cash flow, if the stock market historically is 8 to 10, I'm fine getting that same return with less volatility and a steady stream, albeit not as tax effective, but lets you sleep at night better. And since then, rates have come down, but it's still attractive rates. And at the end of the day, the private credit we're investing in is companies that are well run, have good EBITDA, and are performing loans. So we're comfortable holding that for the long term.
And that space as well, the fact that you're seeing the bank pulling back on loaning these companies or even providing capital for credit, it's a phenomenal opportunity for any family office who understand that market, because there's definitely a capital need, and I think there's the room for the Appgears of the world to be kind of like an agent for that type of solution. From our side, I would say we've been very excited about this market because post-COVID, coming out of the COVID, and we could see that there would be a pullback from the banks, right? And then people are becoming more comfortable to go into the private market to get some deals done, to go to the private market to get their project financed. That's something that I think that we're only at the beginning, and just to see how the environment, the economy is going, I really think that whoever is creating a portfolio right now, construction portfolio right now, it's actually a good opportunity because they're probably going to get some discount in the evaluation aspect.
Right. And I mean, if you're investing in sound companies that have been around for a while and weathered some storms, even though equity markets are frothy and there could be, some sort of downturn coming, looking out 5-10 years, you're not so worried about that. Your businesses or the underlying businesses will be okay. And again, you're first in the capital stack. So.
And how you guys are handling the illiquidity aspect?
We have allocations to certain evergreen structures as well, and that allows some liquidity, although we are mindful that having an evergreen structure with underlying assets that aren't so liquid, we do it with very reputable managers where we feel comfortable they can manage that risk. And also you have to go in with the expectation that when things turn wrong, that maybe everyone wants to redeem and you can't, and that's just the nature of things. So this is capital that we don't need to access immediately. But if on a regular day-to-day, if we needed to access something for whatever reason, it's possible to do it, and we don't have to wait 10 years.
Yeah, I mean, I love the evergreen structure as well. We're seeing it more and more. People are kind of becoming more comfortable with that. I think when we started this process with Appgear, the way we saw our vehicle was it's patient capital. It's capital that we want to put to work. So we handle the liquidity, like you said, the capital that's in there. It's capital where people kind of just want to put to work long term. So if there's any market downturn, I would say if you're well positioned in the cap, like you said, cap structure and the LTV is quite consistent, it really doesn't impact you really, because if you're able to, if you're in good assets,
Right.
the key thing is to be able to select good assets and be able to know and be conviction. It's something I would say now and never. It's more important to whatever you're deploying, to have the conviction where you could navigate those downturns, knowing the company not only have the cash flow, but also have the assets to sustain any pressure. And we're seeing that on our side. Like we're taking a bit more long time to deploy it, but at the same time, we know our portfolio that we're constructing, we have conviction behind it. So
yeah, I think now's a good time in the sense that it's hard to obviously predict, right? Where equities are valued quite high, but who knows? It could run higher for some time. So you can't just sit on a ton of cash all the time and just wait forever. But having some dry powder on the side is good to have for when that downturn hits. And it's interesting because I think there's this disconnect, like there's this need that families now have, it seems to be more popular. Maybe it was always there, that you want some sort of liquidity in these structures. Like it's a lot for a family sometimes to commit all or a big portion of their money to go into a private equity fund where you're stuck 10 years plus one, and in an environment today where there's not a lot of liquidity and there's not a lot of distributions happening out of these funds. You're seeing that a lot in the markets. LPs are selling their PE stakes, or on the GP side as well. So these evergreen structures I've noticed have become very popular, or becoming to, and there's a lot of players coming into the market with evergreen funds. And so it's an interesting time because depending on who you talk to or what the research, a lot of them are offering preferred economics as well to try to, in Canada, to build the Canadian client base.
Yeah, you need some sort of incentive right now to, I would say, to get into these vehicles. One of the things that we talk internally when we kind of deploy capital is, at the end of the day, if you're able to control the process, where, like you said, the vetting process, underwriting process, understanding the valuation, those type of capital stack are well served because they're non-collateralized with the stock market. So if the stock market going down, you don't need to basically panic because you have your sweater, which is credit, taking care of you. And we want to be that. We want to be one of those vehicles where we're fully a diversification play. Like I would say anybody who's investing in alternative or credit have to have a strong portfolio that's quite diversified to allocate 2 or 3 or 4 or 5% into that sector, where that sector can take care of itself.
Yeah,
if the market turn.
Exactly. Like, and we see that with our portfolio. Even if you have a big drop in equities, like when Trump's are doing all the tariff announcements, equities dropped. I mean, it bounced back pretty quick, but your credit portfolio is just humming along as usual. So it's good to have that diversification.
Yeah, that having a vehicle like that, I think it's something that we're aiming towards. And I would say our secret sauce is we do everything in-house. We try not to outsource that process from like I said, from deal origination to sourcing, because at the end of the day, when you're trying to make these decisions, you want to make sure that there's conviction on the table and your portfolio is robust enough to go down to any downturn pressure.
Right.
I saw recently the chief economic officer from CIBC talk about the fact that there's so much capital in the market right now, chasing few.
Yeah.
So that's our mindset we're applying here, is that we're saying there's so much capital in the market, but there's so few good deals. So making sure to be able to have conviction is something that you have to discuss internally. And that's a big part of your job, I'm assuming. We'll just go back to one thing in terms of like, let's talk about legacy. How do you manage investment opportunity, and legacy of the family? The reason I'm saying that it's for us, legacy here is important. Like, we want to be in a private credit, making good returns, but having able to collaborate with good mind, value sound people, it's key, and it's part of that legacy that we're trying to uphold here. How are you managing that in terms of, like, is it a risk or is it an opportunity, and is it part of your day-to-day thinking?
Yeah, it's part of the thinking that we think about legacy succession for the family. I mean, they have a well-known brand, and so the second gen is quite involved, and that way they're in the loop and they understand, and they're very close to family values and the culture, and so they kind of embody that on the day-to-day by being involved in the company.
And do you try to partner with other partners that have the same values and mission statement, or?
Yeah, of course. I mean, you always want to do business with people that you think have high integrity and that you trust. So we're always, that's the only people we'll do business with. And if we think something's off or it doesn't feel right, you look for a different partner.
And when you're talking about portfolio construction earlier, is that a big part of how you create your portfolio, where the legacy aspect is integrated into that, or is this more cash flow? Or
I think on the portfolio, it's involving not only the principals, but the next generation in education of what type of investments the family's doing, and getting to know what is out there as well. So it's an educational process for everyone, and being involved with that gives them the perspective of how to steward the money.
And then globally, what's the global outlook? You see, like now, I would say for us, we had big ambition to go to the US. We had big ambition to deploy into different markets. Obviously, you talk about Trump tariff and Trump policies. A lot of it gave us some pullback. So now we're looking at maybe pushing it further down the back burner. But at the end of the day, how's that impacting your cross-border opportunities in general?
Currently, we don't do too much outside Canada, so it hasn't impacted us too much in terms of the operating businesses. Yeah, we have to plan for some things, but there's, things that I guess in a way on the tariff side have calmed a little bit. And we plan around in terms of the businesses. In terms of our investments, we haven't changed too much, in the sense that, when we look at our buckets, we have our target allocations, and we just invest with the best managers that are our due diligence sources.
And then back to private credit, I would say, can you give us a success story of like a partner that that went above and beyond with you guys, that didn't have to? Because we actually made recently an investment, and it was so flawless and so seamless with a partner, where immediately we called them and we're like, can we do this like 10 times over again? Because it was the less painful process we've been through. They went above and beyond to give us transparency, reporting, what's the big picture. Can you kind of give us an idea or an example that happened? It doesn't have to name the partner, but just kind of give us has that ever happened to you, where somebody kind of blow you out of the water?
I mean, recently, or in my current office, we've invested with top quality GPs that do the private credit. We don't do it in-house, and they provide us regular communications as to what they're doing and what deals they're working on and what has closed. So they've been a great partner to work with. There is no one pinpointing event. In terms of other deals, like in the past, I guess it would be just deals we've worked out ourselves with the bank for lending. they've been good partners as well.
Yeah, I think the bank been good to us also for some reason. But
it depends what bank you work with, right, and their risk tolerance. But and obviously, depending on what kind of other business you do with them and the relationship you have, they're willing to work with you.
Absolutely. I think for us, we use our banking relationship not only as a partner, but it's more as a sounding board of the market.
Right.
What's going on. We try to keep regular communication with them to give us like kind of nugget of how do you guys see your risk profile and how you guys are managing these risks and how you're able to navigate uncertainty.
Yeah.
And I think having those type of relationships close around your ecosystem.
Having the banking partners, there's a lot of the banks now have a family office arm that you can chat with.
Yeah.
But also going to various family office conferences or investment conferences and meeting other folks in the industry. I've met a lot of family office individuals working for the top families in Canada, and just talking with them and seeing what they're seeing, that it's very helpful.
And in terms of alternative investment side, have you participated too much before you came to this family office, or is it something that was passionate for you?
I've always liked them, and I think they've grown. Obviously, they've grown in popularity both on the institutional side, foundation side, family office side. So I've noticed in the family offices that I've been, there's a lot of private allocations, which entails alternative investments. Prior to that, I've been involved with more direct private equity stakes where we're managing the teams, making sure the businesses are doing what they need to do and having that ownership oversight of all the different portfolio companies. So varied experience.
Yeah, when I kind of like first initially got exposed to alternative, it was to the venture side, where I would say many family offices were trying to go direct in venture.
Right.
And quickly realized that they would need to build a full bandwidth of team and infrastructure to do that.
Yeah.
And then they pivoted back to finding great partners, great funds to allocate on their behalf. And also, like I said, either GPLP structure, but really is to figure out the challenge was finding great managers, founders that they would be able to trust to make the right decision.
It's a big step. Like if you're going to try to in-house a VC type approach, a lot of them won't make it or be that big return. So building that out and managing that, it's definitely a lot of work. So sometimes the right answer for the family is, and many times it can be finding the best manager to do that.
And I think that's a skill that's an own skill for itself, to be able to find right managers, right partners. Yeah. And I think that's something that we're trying to get to optimal, I would say. We've been very lucky to find great partners in the past. But it's such a patient glacier movement that
sometimes it's a vision of like you meet a certain partner or someone that has a vision for a business. And in my past office, it was giving a lot of people a chance to work together. We provide capital and some oversight, expertise, but really have that founder go out and grow the business. I mean, it's a big risk, but it's also a rewarding one when you start something from the ground up.
Perfect. And then personally, tell me, for the next generation, what would be a career advice if somebody would want to, at some point, become an investor, such as you yourself, or collaborate with other family offices? I think, what's a couple of advice you would give to these partners or this future generation that wants to?
Well, I remember when I was starting out, I had the passion of getting into the investment world, but I was in the accounting world, and making that jump was difficult. And I created a list of all the platforms, or like the hedge funds and asset managers, on an Excel, with trying to figure out emails, and maybe AI can do that now a lot quicker.
ChatGPT.
And then basically just try to get a meeting. And once you get that first meeting, one of my meetings, he told me this. He's a well-known CIO on the street, and he said, once you get, let's say you're talking to me today, ask me, who do you think I should talk to next? Because then you go, oh, I met with person A, and he told me to speak with you, and now it's a warm introduction versus another cold call.
Got it.
And since they know that person, they'll be like, okay, I'll chat with you since person A said. said that.
It's funny that you said that, because even you're saying this is how you start your career. I would say it still works like that in business. Even our core investment, how we do our core investment, is really about that same conversation where we would talk to a partner and be like, oh, you should talk to so-and-so, and then reaching out to that person. And that's the only way we could get a deal done, because that other person introducing us to this deal.
Yeah.
I think that relationship aspect doesn't change when you get into it. It's more, I would say, keeping it alive and making sure that, I say, bring value. That's the key thing too, right?
And with that, like, one of my mentors told me, work in the room as if your boss is watching you, like he's standing right there. And it's important, when your boss is watching you, how you're working, but what do you do when no one's watching you? Are you still driven and doing what you need to do? And then that kind of effort will get noticed. And through that, that's how I got noticed, and people recommend you, because they say, oh, Simon's a hard worker. I think he's going to do well. I don't mind recommending him to meet this person. So
you still value hard work. That's what you're saying. Hard work still is a main key thing for us.
Yes.
I agree with you. I think everything in investment, it's not easy. A big part of what I do is not only working with family, collaborating with family offices, but it's really for them to understand that the hard work that we're putting together by creating an infrastructure, by creating a vehicle that not only is robust, but we're thinking at 100 years time span. So we're able to give them that confident transparency and that background where they could work with us. Yeah. But that comes from hard work. When someone come and visit a lot of our offices, immediately they kind of realize like we're doing something a bit unique here, because I would say, value hard work is the key to great partnership, I would say.
And I think one thing I'll also add is when you're faced with difficult decisions, which I've been faced many times, especially when you're running businesses. This happens all the time. Evaluate all the facts. And once you get all the facts you can get, make your decision based on those facts. And then don't second guess yourself. Like, obviously, if new information comes, it's good if you need to change your decision, but don't just sit there and constantly question yourself. Move forward. That's one of the leaders I worked with who's done tremendous things. He said, once I make that decision, I'm full throttle on that.
So basically conviction. You conviction with your decision and move forward. I would say this conversation was very insightful for people who understand more family office dynamic. One of the things I have to do a lot of the time, even with our own investors, is to understand how patient capital work. It's something that I try to educate people about how it works, but having you here, understanding how steady hand that, when you're making a decision with these family offices or you collaborate with these family offices, there's steady hand that's behind it. It's not a decision that's taken lightly. And
when you're managing other people's money, it feels even more of a responsibility than when I'm managing my own. I want to make sure I'm preserving the family's wealth. So you really have to scrutinize everything to make sure that you're not making, risky decisions just because you want to get higher returns or things like that.
Absolutely. Again, this has been fantastic. I wanted to thank you for taking the time to discuss with us a little bit about the dynamic of the family office aspect. Also, thank you for being a friend, because I've been pinging you quite often about questions or even this, things that come across my desk all the time. I would say, where do people can reach out to you? What's the best way to communicate with you? They want to pick your brain and connect with you.
Probably just find me on LinkedIn, Simon Ukala. There's not many people with that last name, so you'll find me there, and then I'll be happy to respond.
Perfect. Again, thank you for the audience. Thank you for joining Appgear Capital Podcast. I want to say, please subscribe, follow, because we're very appreciative when you do, and we try to bring you interesting guests and having interesting conversation for the future. And then thank you for listening to us.
Thanks for having me.
Thank you.